Hi, this is Kerry Artak with Wicked Stocks, bringing you the Daily SPY Report for Monday, November 22nd, 2021. Before I jump into the charts, and there's a lot of them today, I want to encourage you to click like if you like the video, if it's of good use to you in your SPY trading or analysis. And also to click subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notifications, assuming your notifications are enabled and on, each and every time Wicked Stocks has uploaded new content to the YouTube channel. So let's jump into the charts. I want to talk a little bit before we get going here about speed lines and speed line analysis. If you're familiar, you know exactly what I'm talking about. There's no rocket science here. It's a very dynamic approach to trend identification. It kind of keeps you on your toes because you have to recalibrate, reconstruct. And let me tell you exactly what I mean by that. We've had this speed line here that I'd been pointing to as a trend-defining line study for the last couple of weeks, and it held nicely late last week. But guess what? It's no longer valid. And that is because we put out a new high last Friday. We pushed through the November 5th high. Now, prior to that, I was using the November 5th high as the point to construct the speed line. And the way speed lines are constructed, and I'll show you right here, this is the former speed line, AB, the October low, B, the November 5th high. 33.3% back down. The pullback there is 455.90. You simply draw a trend line from the October low to 455.90 in the time frame in which the high was made that you can see here. And so that continues through time until you put out a new high, which happened last Friday. So now we reconstruct the speed line. AB is now last Friday's high. And in fact, the 1/3 pullback to the downside is 456.09, a little higher because we pushed a little higher last Friday than the preceding high on November 5th. And so the new 1/3 pullback is 456.09. You draw a trend line from the October low intersecting the time frame that the high was made at the 33.3% downside pullback. And so this becomes the new 1/3 speed line. And I use line studies in combination with each other. So if they're standing out alone, the speed lines, I'm very careful to make sure that there's some sort of intersection or alignment with other studies. I like to see that happen. Now I use them in and of themselves as trend-defining instruments, but I have to put it in proper context. So it's there. I'm watching it. But really what I'm leaning on right now is just sort of a back to basics textbook channel bottom that you can see here at 462.27. So that is our pullback support for the week. It can contain weekly selling pressures, and once tested, we can pull out of there and rally up into the 476 handle or higher, where once again the market encounters still that long-term resistance area as defined by that trend line that goes back over a year of activity to August of 2020. It's held repeatedly several times, most recently a couple of weeks ago when we rallied to within 1% of it on November 5th, and it's there as a sort of a ceiling of resistance that can contain buying perhaps through December trade, and below which we can trade lower from here. The question is, will we, and how far south? And I've been saying the 439.18 level is not out of the question by the end of the year. And so closing below the 456, sorry, I don't know why I say 56, 462.27 channel bottom would be my indication of that. Now, of course, on the way down, right now, in this moment, there's all kinds of little levels on the way down. You've got the speed line at 456.96. You have the old high at 454.05, which is presently coinciding with a 3/8 Fibonacci downside retracement, FYI, October low against Friday's high. You've got little levels all the way down. And so you can get sort of this paralysis through analysis if you try reading into it too much. I then like to just sort of defer to what I consider to be basic channel study, trend identification. In other words, holding above 462.27, we have either a consolidated framework now that can play out over the next week, or so, or B, we can continue to push on to new highs into that 476 handle over the next few days, over the next week or so. So that is sort of the parameters here as we continue through the rest of November. 462.27 floor, and right now we have the 476.31 ceiling, and we could trade inside that zone all the way into early December, and not until we close below 462.27 do I see a good case to be made for what I would consider to be a progressive slide south, possibly as far south as that 439.18 channel bottom. And I'm only pointing to that 439.18 channel bottom because we've already tested long-term resistance. If we were just up here in no man's land and had not tested long-term resistance in the 476 handle, I wouldn't necessarily assume that just closing below 462.27 would inevitably entail continuation to the downside to the 439.18 channel bottom. But when you put it in the proper context that we've tested long-term resistance, that the market likes to fall back to long-term support once it's tested long-term resistance, and closing below 462.27, there's no other way for me to see it. Anyway, enough on all that. So for today, I've got 466.65, a very simple channel bottom, and it will show the support and resistance here. Can contain session weakness. We actually have a stable day dynamic holding above 466.65. We can easily test 469.73, which is last Thursday's settlement, the all-time high settlement price for the SPY. So that has sort of a soft pivot point quality today. If we push through 469.73, that 473.25 level in reach where we can place a daily high. Now, what is 473.25? It is nothing more than the simple rising channel top that I think I showed late last week. It can contain daily highs, and that's about it, I think. In fact, if we close above 473.25, I would expect tomorrow a test of the 476.31 long-term trend line illustrated here, where, once again, we could top out into possibly through December trade, and it's a significant upside continuation point, into Q1. So if we were to close above 476.31, I could show you little price points all the way up as the 2 to 3 week target, so forth and so on. But I'll get to that if we close above 476.31. But just know that if we do close above 476.31, I am then anticipating 3 to 5 months. A bullish continuation, I think, is realistic up to the 524.37 long-term channel top, which would put us into late Q1, early Q2, where we could actually top out into later year. We could even push to new highs later in the year and retest that channel top. I think I was alluding to that as well last week. Let me think if there's anything else that should be covered. I'm looking at the support and resistance here. I don't anticipate seeing a settlement today below 462.27, but just know if we break, especially if we open today below 466.65, then that 462.27 channel bottom is actually in reach today, where we can place a weekly low and from there once again rally back to 476.31 within several weeks. But if we do close below 462.27, then the market becomes, I'd say, highly susceptible, let's put it that way, to falling back to the 439.18 formation over the next 3 to 5 weeks, which is firmly in the 440s as we move into later December. So it's not quite the fall that it appears at this point in time, because that channel structure is rising on a daily basis. So I think that's all that really needs to be said today. I'll leave you with the support and resistance for today. Just a reminder that all those minor levels between 466.65 and 473.25 are carefully chosen. They are valid day trade levels for aggressive day traders. The most notable of those 5 is 469.73, the high settlement price, all-time high settlement price from last Thursday, below which 466.65 is in reach today, and above which 473.25. And that's all I've got. I will be back tomorrow. Please click like, please click subscribe. You have a great day, and I will talk to you tomorrow for Tuesday's Daily SPY Report.